Alrighty, folks. Scott Bessent, our U.S. Treasury Secretary, said something this morning that I wanted to share with Matt, the mortgage guy, and get his reaction. I want to ask him, what does he think it means, and where do we go from here? How you doing, sir? What's going on, Matt?
I'm doing great. How you doing, Mike?
I'm doing well. So you haven't heard this quote yet. At least I haven't shared it with you, but I wanted to read what Scott Bessent said this morning. We are going into an easing cycle, and we will see massive decrease in mortgage rates. Powell should have signaled 100 to 150 basis points, not the measly 75. So, Matt, first I want you to react to this fact that Scott Bessent is calling for a massive decrease in mortgage rates. And then second, what does massive mean to Matt, the mortgage guy? Because that's an interesting word that doesn't have a definition. So what do you think? Scott Bessent's calling his shot. Rates are going lower.
Yeah, sounds like he's trying to appease, somebody else who's calling for lower mortgage rates, which like we can all call for it. We can all want it. It doesn't mean it's going to happen. But
although his voice is a little bit better, he is the U.S. Treasury Secretary, so he can pull some levers.
Yeah, and honestly, I'm rooting for it. I'm skeptical for a couple of reasons. Mainly because it doesn't really fix the problem, right?
Yeah.
Like lowering mortgage rates and juicing up demand isn't going to fix housing, even though, it's going to feel good for a lot of people,
Yeah, the mortgage business, the real estate agents.
Right. We're all going to feel great. Action is going to pick up. There's going to be more transactions. So, I can't say that I'm sad about it, right? Like I love any news of it. I just think that, where we got to be careful is, giving people false hope because, headlines and things like that, they sound good and everyone's going to, be like, great, mortgage rates are going to be 3.5%. Even though I've been upset about not being able to buy a house the last couple of years, like I'm going to get it and I'm going to buy it at a discount because stuff's been on the market for 60 days. And I'm also going to get a 3.5% interest rate. It's just not realistic.
Yes. Those two things will not go hand in hand. A 3.5%
You'd be surprised how many
rate.
people don't understand that, Mike. Rates go down, demand goes up, prices also are going to have upward pressure. Like people don't get that. And they don't want to hear it. If I told them, they wouldn't listen anyway.
So I agree with all of that, but I want to get to the word massive is again. And I wish the reporter would have been smart enough to ask Scott, what does massive mean? Right. It's one of those words that could mean lots of different things to lots of different people. So if I were to tell you today rates are 6.2%, just to pick a round number, what would massive be? Right. In Matt, the mortgage guy's world, how much lower would rates have to be for you to say, wow, that was massive? What number is massive?
I honestly think if rates got to the mid fives, if rates
so 5.5%,
0.75%, that would be massive. Because we just came down to near 6%, and that was a 3-year low. That was exciting for people. To get to 5.5%, it would feel massive from where we're at today. And of course, anybody who's talking that wants attention or wants to make a splash is like massive rates, and what does that mean? To your point, like does that mean 0.25% and massively coming down? But I think 5.5% I would consider massive drop.
Yeah, I think that's right. And I love that number because I think that's realistic. I think some people hear massive and they think we're going back to 3%. And I'm like, are you kidding? Right? We shut the country down, right? The Fed was the largest buyer of mortgage-backed securities. We are not going back to 3%. Stop it. Just stop it. So I like the fact that you picked a number that's reasonable. And it's funny you bring up 5.5 because yesterday Fannie Mae had an update on their forecast for mortgage rates, and they went from everything being in the sixes, I think 6.3. Now they're sub 6. They think we're going to see sub 6. They do think it's Q4 of 2026. I think it's Q1, maybe Q2 of 2026. But 5.5 is certainly not out of the question. I think 5.5 is possible.
Yeah, I think so too. I've had a lot of conversation with people about refinance, and everybody's trying to do their best to strategize and think about the future. I had somebody last night ask me a good question, right? He's getting a DSCR loan, and he doesn't know whether to pick the 1-year prepay, the 2-year prepay, or the 3. because if rates go down in a year and he wants to refinance, like he doesn't want to be stuck paying this
Yeah.
10, 12, $15,000 prepayment penalty. And,
Sure.
the truth of the matter is, to a certain extent, it's a guess, it's a bet, it's a
Yeah.
hedge.
Yeah.
No matter which one you do, pay less now, have a longer prepay period, pay more now, have a shorter prepay and be able to get, out of it and refinance. And so, yeah, I guess the betting money is on rates coming down in the, next 12 months.
Sure.
How soon they come down and how much they come down is what nobody really knows.
Well, I think the other thing that's getting really interesting, because I talk to people in the mortgage game that sell to Wall Street, and I think something is becoming very obvious on Wall Street that most people don't see, and that is Wall Street's hungry for mortgages. I think the fact that we've had a depression level of transactions, Wall Street's hungry. So Wall Street is starting to make exceptions, right? They're starting to get rid of hard prepays and only have a soft prepay. So if you sell it, you don't pay it, but if you refi it, you pay it. They're starting to take the higher credit score versus the lower credit score on an application, right? They're just making these adjustments to basically try to open up the volume of loans. And I think that's a signal that most people are missing. And, the other thing that's going on in mortgage is we've seen the spread, right, between the 10-year and the 30-year mortgage come in. It was historically wide. It was over 300 basis points. Historic is 1.8. It's now 2.2, 2.3. Even if the 10-year doesn't move, we still could go lower 30 to 40 basis points just by that compression. And
Right.
I think that's all starting because, again, the mortgage industry has been in a depression. And we got a hungry Wall Street that wants some loans. So I think we're going to see some competition heat up to rejigger, refi, cash out, and purchases. I think that's coming.
Oh, I'm here for it. Yeah, because we're in depression. We had rates tick down to 6%. I had a couple dozen people take advantage of. They were in a 7.25. They were in a 7.125. We got them 5.99, and man, it felt like the best meal I'd had in a long time. Right, standing
sure.
in a soup line, I got a double serving.
Yeah. Again, it's really interesting because, again, I think we're going to see the mortgage market unlock in the following ways. Lever one, it's the rate and term refi. It's the people that were in the sevens getting into the sub 6. I think that's already started. We saw a bump last week, 70%. We saw a little tick this week. I think the next one to unlock, and this doesn't happen until rates are sub 6, that's the cash out refi. And then I think the purchase market heats up at 5.5. I just think it's that kind of, legs on a stool. If we get to 5.5, all guns are blazing, refis, cash out, purchases. It could get wild.
Yeah, I literally just watched a replay of last Wednesday's sales meeting from UWM, largest lender in the country. Last Tuesday, the day before the Fed meeting, smartly, mortgage brokers locked a lot of loans because they didn't want to gamble on what was going to happen. It was in their company's history, I believe, the biggest day for they locked something like 4.8 billion in a day.
A day.
In a
Strong.
day. I think it was 8,000 plus loans that were locked. And so, yeah, to your point, rate and term refinance, that
Done.
party
It's
is
going.
here. That party started. That party is raging out. And, I shared with you last week, I'm not even signing up for emails, but I'm getting emails from these big mortgage companies.
Yeah.
Rates are down, cash out. I joked at a real estate meetup last night too, that, whatever marketing they need to use, they used the Fed meeting. September 17th was a great marketing opportunity, and I'm still getting them. The Fed lowered interest rates. What does that mean for you?
Yeah.
And no matter how wrong that is, where it's not mortgage rates, it doesn't matter.
Yeah.
It's still an email that the consumer clicks on and replies, or
it's got an open rate. Yeah.
Call somebody, so if you're Better or SoFi or Rocket or any of these companies, it's hard to knock them for marketing to get the phone to ring.
Yeah. At the end of the day, again, folks, I think we're really on the cusp of 3 legs for the mortgage industry. Rate and terms already happening. The people that got gambled, in my opinion, with the 2-1 buy downs, they got lucky. They're getting out of that stuff now. Cash out refi starts sub 6, purchases 5.5. Anything of note about the real estate meetup that you want to talk about?
Yeah, I mean, it's an interesting time. I brought some local Sacramento stats. I looked at some nationwide stats. Just slow is a word that, professionals use because volume wise we're slow. But soft is another word that really describes a lot of markets, right? Like
Mm.
flat or down a few percent year on year. And I was talking to somebody who's shopping in your backyard down there in the Tower District. They're looking at this house that's been on the market for 306 days, Mike.
I hope the next statement is a disrespectful offer is coming. That's what I hope.
Yeah, well, it's a friend of ours, and I told him, I said, because he wanted me to run the numbers to the list price. I go, why are we even running that exercise?
What are you doing?
Bro?
Yeah, stop that.
yeah. You've been on enough calls. You wouldn't do
Come on.
that. And so let's run it at some lower numbers. Here's the craziest part. It was listed in November of 24, right? 306 days ago.
Yeah.
They haven't done a single price reduction. Like, who is asleep at the wheel or
wish pricing, baby? Wish pricing.
Seller? Yeah.
Yeah. Again, it's really funny to me because, this is a great example. I think there's a lot of fake inventory. So here's the deal. I don't know that seller at all. Frankly, I don't even know what house it is, but I know the story. There could be a seller out there that picks this house in the Tower District and says, I want to sell it. I'm going to make up a number, 300 grand. And it's on the market for nearly a year and they don't do a price drop because they don't have to sell. They're waiting for that one 1031 money or that one special person who wants to buy it on that street to be next to that neighbor or whatever. Otherwise, they're not selling. So I ask you this. Today, that house is counted as active.
Right.
Should it be? Right? I don't think it should. And I think there's 10, 15, 20% of properties out there that are just like that. They're not going to take a dime less. Now, if I'm shopping for a house and it's been on the market 306 days, you bet your ass I'm writing a disrespectful offer. I'm talking 20% below asking at least. But, we'll see, I guess.
Yeah, I know. It'll be interesting to see what happens. Cause I've had those conversations too, where, in my eyes, a buyer brought a respectful offer,
right?
5-10% below that price. And it's like, that's a starting point, right? You've been on for a year.
What are you thinking? Yeah.
At 340, like starting at 300,
doesn't sound crazy.
You should be doing a backflip. You should start with a thank you, maybe. But some sellers, to your point, are unreal. Like maybe they own it free and clear. Their holding costs aren't that much, and they're just like, if we get 325 or more, we'll sell. If not, we'll just put this thing on the rental market, rent it, and be done with it.
There you go. If people want to get something started with you and talk shop, what do they do?
Go to greatmortgagebroker.com. Quick, easy form. Me and my team are happy to help no matter where you're at. So go to greatmortgagebroker.com. Chat. You got to start with the numbers. I'll preach that till I die. I've talked to enough people that don't know what they don't know. And at this real estate meetup, I had a lot of one-off conversations. And it's hard to hit a target when you don't know what you're
where the target is. Yeah, exactly.
Yeah. It's like, hey, I want single family or a duplex, and I want it to cash flow of a few $100. Well, like, would you know it if it came across your desk? Because some people, don't count on the person selling the property to be the one to tell you this is a great investment, right? Like this duplex is a great investment, 800 grand. Oh yeah. If I buy it with 30% down, I lose 1,500 a month. It's a sweet investment.
That'd be an alligator just to tie it up.
So know your numbers. Start with the mortgage side, whether it's with us or anybody else.
Yep. Greatmortgagebroker.com. Thank you, buddy. Take care. Have a good week.
Thanks, Mike.